Hey everyone, thank you for joining me. Today I'm going to talk about two things that are certain in life, what fishing has to do with taxes, and what type of income pays the lowest rate of tax. So if we've never met before, quickly, my name is Carrie Esho. I am called to talk about personal finances. I have been put on earth to own my own business, make videos like these, and share my experience of 20 years in the personal finance industry with you, and to help you correlate it and improve the quality of life that you have. So I just recently got one of these balance ball chairs, and so I'm really gonna try very hard not to bounce in the bouncy chair, okay? But I can tell I'm already doing it. But anyway, so I told you I was gonna, what does fishing have to do with taxes? Hi, Linda. And what's the best type of income to earn? Hey, Jess. And what, one of two things that are certain in life, okay? So there are two things which are certain in life: death and taxes. But here's the catch: you only die once. So you have to pay tax every year, and you only have to die once. It is, I don't know the author of that, but I thought that was kind of funny. You only have to die once, but you have to pay taxes every year, and sometimes more frequently, quarterly perhaps. So last week I kind of talked about practical prosperity and what that means, and why I have a seminar called that. So I teach about, number one, what does the Bible say about money, and then number two, what naturally speaking are good things to do as far as coming from a personal financial planning, practical aspect and application. So the first thing I wanted to talk about is the super, and then I'll talk about the natural at the end. So be sure and hang around for that. And then I'm going to tell you at the end what we're going to talk about next week, and I might finally stop teasing and actually talk about the new tax act. But today we're going to talk about the difference between what fishing has to do with things, and then of course the difference between unearned income and earned income, and why one of them is taxed differently than the other, and which one is the best of the two. Well, not the best, but the least, the rate at which it's taxed is the least. So number one, what's it at in the Bible? Okay, of course, a lot of you know that they were asking Peter, does your master pay taxes? And Jesus said, go fishing, and the first fish that you catch is going to have a coin in it big enough for the both of us to pay taxes. And so if you could think about that, that'd be like me and you having our taxes paid supernaturally in a fish's mouth. So everybody's going to the Tennessee River, or the Columbia, or the Mississippi, wherever. No, I guess it was the Sea of Galilee. I don't know. I should have brushed up on that before I came on. But anyways, I'm sure someone out there knows. You can let me know in the comments. And then, of course, Jesus said to give to Caesar's. What is Caesar's? He had them look at the coin. He said, who is on the coin? They said Caesar, and he's like, yeah, so give to Caesar what's Caesar's. Zacchaeus was a wee little man, but he was also a tax collector. And I like this one in the epistles in Roman. I guess that was Paul that wrote that. I hate putting myself on the spot. Why do I do this? But anyways, he said, pay to all what is owed, and he said, pay taxes to whom taxes is due. Hey, Renee, thanks for coming and joining. Okay, so, and then the other thing, we just had Christmas, and that's actually what they were on their way to do, was to go pay taxes and to do the whole census thing. So that is like super of the practical prosperity. That is the prosperity part, that a coin would appear in a fish's mouth that would be enough to pay taxes for me and for you. And, even if you were below poverty level, that would still be a lot of money. So anyhow, and, Jesus dined with tax collectors. So I don't think that tax collectors have such a stigma. I don't know, but I know that it's like, oh, if you're getting audited, that's a big thing, and you want to avoid that. But I mean, if you're on the up and up, there's nothing to be worried about. So that's where kind of like the give to Caesar what's Caesar's part. Okay, so speaking of being on your way to pay taxes, right, like Joseph and Mary, I almost said Jesus. Okay, but anyhow, this year, right, we're at the end of 2017. So at the end of every year, up until the time that you file your taxes, you can actually still contribute to your IRA to help reduce your tax liability. So what some people do that you could do is you can go to your CPA, get your taxes done, and say, okay, have I already maxed out my contributions? And if the answer is no, then you can still make a contribution. I'm not sure, a lot of people who do contribute know that, but some people who don't might not necessarily know that. Hey, CT. And so anyways, if you have those IRAs and you're not accustomed to giving to them, even a little bit might be the difference that puts you into the next lowest tax bracket because it reduces your tax liability. So that is something that you can do to perhaps lower your tax liability. And think of it like this. It could be the difference between paying, hold on, I've got a tax table. You know what that sounded like? The robot from Richie Rich. Does anybody remember Richie Rich? Uh-oh, Richie's in trouble. Okay, what is... All right. So it could be the difference, say, between paying, here's a big one, 25% and 15%. So if you're on the borderline between like 37.9 and 91.9, that's a pretty average, common, middle-class income. You would never know. That might be the difference that brings you down into the 15%, which is a substantial difference if you're making 50 grand. You know, so anyhow, then I wanted to talk about what a tax refund is. So I know that a lot of people enjoy going on a trip or buying a car or whatever. Like, it's like when they get their refund, it's yay, we got a little extra money. And I did a video a while back, so I won't go over and reiterate what I already have said, but I did a video a while back about changing your exemptions and how that can create more money in your paycheck all year round so that things aren't as tight and you don't quite feel the grip just so much. And so that is something that you can do yeah, it's a tax refund, but all that means, y'all, is that you paid too much and they're giving you back what you didn't necessarily need to pay. And by pay, I don't mean what you're liable for. I mean, what did your employer withhold out of your check, the difference between your gross and your net. So that's what I'm talking about, like what was held out, what was withheld from your net pay to send to the IRS so that when you file your taxes and you actually find out what your tax liability is, you realize I didn't need to send that much anyways. So, okay, so number one, we talked about super versus the natural, the prosperity that goes with the practical prosperity ideal, which is where they caught a coin that was enough taxes. So if just to encourage you, if you have to pay taxes, that there is provision out there for you so that, you know, miracles can happen. That's what they were on their way to pay taxes during Christmas when Jesus was born. And then the natural part that you can put an IRA, you can contribute to an IRA up until the time you file your taxes, and which can be as late as April 15th. I know some people who visit their financial advisor annually on April 15th. And that's okay. As financial advisors, we knew it was coming. As bookkeepers and accountants, you know that people are coming. And you do your best to accommodate people. And shameless personal plug, I do clean up QuickBooks. If you have your own business, I do actually clean up QuickBooks for people so that you can go to your CPA and not do so sheepishly. So, okay, so then another one, if you, speaking of which, go to your CPA, make sure if you volunteer, that they know that. Make sure anything about your life, because if I'm a CPA and you come to me and I don't really know you, I haven't been doing your taxes every year, say you just moved to town and I don't necessarily know you, or your buddy said, hey, this other guy's great, he got me a refund this year, or you need to go to this lady, you know, she's super nice, or whatever. Anyways, they don't really know you. They don't know what all has changed in your life. They don't know if you got a new job, so they can't help you with the tax the tax implications of rolling over your 401k versus keeping it. There are different provisions and different protections credit-wise. So there's a plenitude of reasons why you want to make sure your CPA knows. Our CPA has like a giant, not even joking, stack of this, that, and the other. And that's good because that's one way where they can mine that information. But I cannot remember ever once it's saying, did you volunteer? Did you drive your own car? Like TurboTax asks you if there were any unpaid job expenses, but it doesn't say, do you volunteer on a weekly basis, and do you buy snacks, or do you drive your own car, that kind of thing. So, and then this is great, and I love to tell people about this. The lowest, so yeah, we're talking about taxes, and that's earned income. And also on your 1040, you're going to mark your unearned income. So this could be dividends, capital gains, or it could be like rental income. And these are the best. Unearned income is the best, because why do I say that? Earned income, federal tax bracket. Now this is not the, this is the earned income bracket. Hold on, I'm gonna think of it. This is not the effective tax rate. Your effective tax rate is what happens after your standard deductions and after your, well, or if you itemize your deductions and then your exemptions, all that kind of brings down your tax liability. So that is your effective tax rate. And you guys remember when Mitt Romney ran for president, I think against President Obama, they just they had a heyday with Mitt Romney's tax returns. And I keep interrupting myself, but I think this is so cool. Did you know you can actually go get the tax returns? There is a name of an institution that does it. I can't think of it, but you can go back, I think, as far as Reagan in '86 and get all the president's tax return sans our current president, but you can go back and get them all. There is actually, I think, one page of President Trump's, but nonetheless, okay, so I was saying that, all that to say, when Mitt Romney ran, people just had a heyday with him, and that really is, in my opinion, why President Obama won, is because of Romney's tax returns. I mean, I think he owns a horse farm somewhere, and everyone's like, yeah, it's just for a tax write-off. But if it's part of the tax code and it's on the up and up, do that. Get a good CPA that'll tell you the types of things that you can do, the strategies that you can use. So anyways, talking about unearned income, well, having a horse stable, and I talked about gambling. If you make money gambling, you can write off your expenses. Oh, I forgot to, darn it, I'm sorry. I forgot to do the do not disturb. Uno momento. So anyhow, Sheldon is in the top 8 of the defensive linemen for the Seahawks. Okay, so anyhow, unearned income, I love it because we were talking about the federal income tax brackets and how Romney's effective tax rate was basically the same as his secretary, and that just upset middle class, and it should, you know, but you, middle class America, upper, lower, upper, you can do the same thing. You can have the same effective tax rate as Mitt Romney because you can invest the same way, or you can plan your income the same way that he did. And so that's why I love looking at them. I know it's kind of nerdy, but the reason why I love looking at them is it gives me strategies. Okay, what did this multi-billion-dollar multimillionaire do with his taxes, and whatever is published out there, you can look at it and say, oh, okay, well, that was a good idea, let me do that. So you can pattern kind of some of the things that you do after that. But anyways, so the reason why the effective tax rate was different was because of deductions and what's the word? The one on the first page of the 1040. Exemption. And so, all right, here is the tax table, federal income tax brackets. And of course it has changed, and I keep telling you I'm gonna, and I will. It's just that it's so laborious, but I need to know it anyway. So, but 2017, it was 10%, 15%, 25%, 28%, 33%, 35%, and 39.6%. And I do believe that was the Obama administration that made those changes. So if you make over $418,000, you're paying 39.6% off of all your earned income. You are not. This is what is the deal with Mitt Romney. Watch this. And someone else just came to mind too. But that's 40% of your income. If you made $1 million, you would, Hillary Clinton. If you made $1 million, you would only take home after taxes $400,000, unless you did something with your money to make unearned income. So unearned income, I just didn't print it out but if you hold it long term, it is 15%. Most people pay 15%. High earners, so people with, in above that 400,000 mark, they'll pay 20%. Well, pop quiz, y'all. You want to pay 40% or 20%? On your taxes. So that would be them. But even, most people, like maybe middle class or upper middle or lower upper. Okay. But anyways, most people would pay 15%. So would you rather pay 28 or would you rather pay 15? I mean, right? These are rhetorical questions because you know the answer. I know the answer. And if you have a lower income, you pay 0. So you can pay 0% on unearned income or 10% on earned income. So that is a great way to save money on taxes. And then the first thing that I said was that if you haven't already maxed out your IRA, that you can make that contribution up until the time that you file. And then, to watch that video, I'm not going to go over it again, but you can make adjustments to your paycheck so that you feel extra throughout the year. And then to make sure and explain to your CPA, this is a way that you can save on your taxes, because if they don't know you, they don't know all the different things. So like, not just, hey, I'm Carrie and here's my income. I own a business. My husband has a job, and here's our mortgage, our interest deduction. Like, okay, yeah, but not only that, but did you know that I have a part-time gig playing music, or, whatever, like all of that, just in case it comes into play. In the case of volunteering, my kick. Okay, and then just what I just said, earned income versus unearned income, they're taxed at different rates. So as big of a difference as 39.6 versus 25%. And then, so that's like the practical aspect of practical prosperity. These are the things that over the course of the years of my studies and experience that I've learned that can help people, like in the here and now. This is a principle. If you'll follow, it'll do well for you. And then the super part of it is that if you do owe taxes and maybe it's a little over your head, that provision has been made. In this biblical example that I used, it was through a fish, that there was a coin in the fish's mouth, and that it was enough to pay taxes for me and for you. And that's a substantial amount. And so, if your tax liability, let's say, is over your head, well, the Lord has provision for you. Okay. And then, hey, good news is that you're paying to Caesar what's Caesar's. You're paying to the IRS what is due. That's always going to change, like we just experienced. So for the time being, that's what it is. And so this is what I've been talking about. So I said at the beginning of the video, and if you're just joining in, go back and listen to some good stuff about how you can save on taxes. But I talked about unearned income versus paid income. So, and I keep saying so I'm just gonna do it. Right now is a busy time for people who work in taxes because everybody wants to do them. And then, you know, like if you own your own business, you want to clean up your books so you can go to your CPA and not be like, yeah, I didn't enter anything from April. I'm really sorry about that. Well, you know, find someone that can clean it up. If you use QuickBooks, find someone who does QuickBooks and have them do it. Next week, I am not making promises, but I'm going to try to read that between now and then. Let's be honest, it's not going to happen unless, here's what I'll do. I'll make you this promise. We're supposed to get snow and ice Friday, January the 12th in the South. So if we do, and my children are home, I'm not going to get any work done anyways. I will read it, I will study it, and I will come back live and in full effect next Thursday at 1. So because my kids, you know, they'll send the kids home from school for, you know, we had last year coming back from winter break, we had 1 extra day of break because it was going to snow. And I have a picture of my daughter. Maybe I'll post it. I don't know. But she's out in the backyard. There's 1 snowflake. She's out in the backyard trying to catch a snowflake on her tongue. She's all bundled up, you know, but she's out in the backyard. It may have been cold, so that's why she was bundled up, but she's trying to catch the 1 snowflake that's falling. So, but here in this, it's serious business. I know people give us a hard time, but let's see you live through 104-degree summer, northerner. Say what you want about the South, but no one ever moves north to retire. Okay, oh, and then the punchline of the joke at the beginning, if you weren't here for that, was that there's 2 things that are certain in life, death and taxes. So, CarrieSO.com, amoneymanager.com will give you more information about my practical prosperity seminars that I do. And so these things I'm doing for the first little bit of this year anyways are just little snippets that you can kind of get an idea what type of information is in those seminars, the super and the natural, the practical and the faith prosperity. So guys, thanks so much for coming out and for all the love, and kaboom, there it goes. I wish I could do it back, but thank you. That means a lot to me. That hits me right here. If this video has helped you, and I pray that it has, I believe that it has, share, like it, comment, and what I do, folks, is well, what you see here, folks, says, how do I get back on the right track? Okay, I upload it to YouTube, and YouTube puts the captions in, and then I come back into Facebook and add the captions so people can read it while they're at work. No, on their lunch break at work, or their 15-minute break or whatever. So anyhow, thanks for joining me. I'll be back next Thursday, 1 o'clock, and tune in later for Legos with Lauren, my daughter, who's going to be a professional Lego builder. Thanks for coming and spending time with me. I really appreciate it. Bye.